Good morning and welcome to the Valley Economic Alliance Next Level Growth Program. We are so very excited to have you join us today and hear from some terrific speakers, which are bringing information and resources to the Valley community, especially with regard to finding commercial space and financing with accounts receivable. I'm Sonia Blake, and I'm President and CEO of the Valley Economic Alliance. A little background about our beloved alliance. The alliance was founded in 1995 following the Northridge earthquake of '94. We are a 501c3 nonprofit organization, and we're a collaboration of a variety of nonprofit and government and business leaders, all working together to advance the community and economy of the San Fernando Valley region. Our region includes 5 cities, that is Burbank and Glendale, Calabasas and Los Angeles, and the feature of our Economic Development Committee meeting later on this morning, the city of San Fernando. So what we do is, thanks to the support of our community partners and others, we are able to provide free small business assistance to help companies grow. We engage in community revitalization projects, encouraging developers to develop underutilized parcels of land and real estate projects. And we promote tourism and lead other strategic initiatives like workforce development, environmental sustainability, efficient transportation and mobility systems, and so very much more. So on behalf of the Alliance, I'd very much like to thank our sponsors for today's program: Pacific Western Bank, the San Fernando Valley Business Journal, CMTC, Mission Valley Bank, and Beasley Management CBRE. The support of our sponsors really enables us to do this valuable work, and we really want to encourage you and anyone you know to partake of our business assistance program. As I mentioned, free business assistance, which could involve access to capital. It could involve help getting a mentor to help with marketing a company. It could help, the program helps you to find employees, grants and loans, and all kinds of resources to help a business start, grow, and thrive right here in the Valley. So to learn more about that program and to share it with business owners you know, you can go to thevalley.net/assistance. And I'm going to ask the team to put that in the chat so that you'll be able to access that as we go forward. So in this session today of our Next Level Growth series, speakers will share their insights and expertise to help you better understand commercial space, finding commercial space in the San Fernando Valley region. And you'll learn about accounts receivable financing. The replay and the slides will both be available on our website at thevalley.net/events. You click to go to past events, and then you'll be able to find a whole library of resources from prior events. And now, to introduce our featured speaker for this morning is a treasured board member of the Valley Economic Alliance. Our board of directors have been just so instrumental as leaders, helping the Alliance to grow and serve our community. And we're really thrilled to have our board member, Janice Azarin, with us today. Janice is Assistant Vice President at Pacific Western Bank, and she's going to do the honors of introducing our first speaker for us this morning. Janice, good morning.
Good morning, everyone. I'm Janice Azarin. I'm the manager of Pacific Western Bank, and we're located in Warner Center. And I would like to introduce Scott Silverstein, our first speaker. Scott is a broker with Lee & Associates. He's been a broker with Lee & Associates for close to 20 years. Assisting businesses in the Valley to find commercial real estate that suits their need for the right amount and type of spaces in which to grow their businesses. Also active in public service, Scott has served on the Woodland Hills Warner Center Neighborhood Council for 14 years, the last 5 years as president, and has also served in leadership positions at the Child Development Institute and El Camino Real Charter High School. So let's welcome Scott Silverstein.
Good morning. Thank you very much. So really for this portion, I'm going to be speaking about the leasing process, how a company comes into the Valley and leases space. And the first recommendation I have is get representation, meaning that you want somebody to represent you on your side of the equation, on your side of the negotiations. And I've been a broker, as we heard, for 37 years. My offices have all been in the Valley. Right now, our offices go from Oxnard to Sherman Oaks, and Lee and Associates is a broker-owned company. We are a national, actually international, throughout the United States. We're in Canada. We're broker-owned, so we have a personal interest in making sure that our services are provided adequately and professionally to anybody in the Valley. So thank you very much for this opportunity. So if you want to, Dominique, with the first slide. Okay, next. All right, so when I say get representation, if you need an attorney, you get an attorney. Generally, you'll get an attorney that is professional in the reason you're getting it. You're not going to get a defense attorney for an accident case or something like that. Just make sure that the person that you get is a commercial real estate agent, somebody that specializes in commercial real estate. It's a very specialized field, and it's not one that you could easily go back and forth between non-commercial and commercial. So I strongly recommend a commercial agent to represent you. It doesn't cost you anything. We are compensated by the buildings, by the landlords, and that's how it works in this market. We act as your fiduciary. Now, those of you that don't know, the fiduciary is the highest level of representation, and this is how we treat it. The representation will provide for you, and hopefully you'll be very happy with the outcome. We'll build a trust over time, and we'll make sure that the deal gets done, and you are represented, and the process becomes much easier. All right, next. All right, so the first thing you're going to do is you're going to meet with your broker, your agent, and discuss what you need. Why do you need it? How much space do you need? Determining where you want to be. That could be a broad spectrum of reasons why you want to be there. I recently did a transaction with a company in Burbank, and I don't mean to fault Burbank, but one of the principals lives in Woodland Hills and one lives in Tarzana. And we ended up moving them to Warner Center, and we had this discussion over. I said it's a quality of life issue, and they thanked me from day one for moving them, because now they don't have to sit in that traffic on the 134 and the 101 every day. So it's important to have this discussion with your broker. Also, the type of use that you're doing, if it's medical use, if it's office use, if it's retail, industrial, all this should be discussed right up front. So when we go out and try to procure the location for you, we're in the right spot pertaining to zoning, pertaining to many different things. Also, your budget, that comes into play probably at the top line there. And little special items like, do you need extra parking? What are your hours of operation and the signage requirements? So as you see, a lot of the stuff here is very specific, but just to let you know that a typical transaction in the leasing field will take anywhere from 1 to 6 months. And it depends on the size of the transaction, the complexity of the transaction, and numerous other issues. But don't leave yourself short. In other words, don't come up and say, well, my lease expires, or I need to find space in 2 weeks or a week. I'm not saying it's not possible, but it makes life a lot easier for you if we have the ample time to go through this process. Thank you. Next. So the first thing we're going to do is, as we say, start the negotiation. And what I'm going to recommend at this time is that you prepare your financial information. The landlords are going to want to see your financial background, whether it's your corporation, depending upon the size of the corporation, whether it's your personal finances or whether it's both. In some cases, it's both. And there are items that we will discuss individually as we proceed with the discussion as to the extent of the potential liability in the lease and the creditworthiness and many other issues. But as you see, there are numerous issues to discuss. So start gathering your financials as early as possible. Next. All right, now we sit down and we draft a proposal. We'll meet with you to find out what your needs are, and we will draft a proposal based on those needs. What the term of the lease is, as I said, the budget amount, the location, but also there are many other options that you should be discussing that will provide benefit to you, whether it's during the lease or whether it's at the end of the lease term. And as you see here, there's a list of them. There are many, many options to discuss. And then there's the operating expenses. A lot of people don't understand what operating expenses are. And these are all things that are explained in the process. And you need to know everything about what that lease says just to make sure that you're comfortable. And that's where we come in to explain the situation, to explain the differences in the buildings. You know, one building might have a higher rental rate, but have a lower load factor. Now, people are going to say, what's a load factor? And that all gets into how the square footage is calculated within the building. So two buildings, one has a higher rental rate and a lower load factor, and one has a lower rental rate and a higher load factor. It's basically, you're looking at the same thing dollar-wise, but you may get more or less space in the transaction. This is all stuff that's explained to you as soon as the negotiations start and we're searching the buildings. Next. Be prepared for the counter proposal process. That could be many, many counter proposals back and forth between the landlord's representative and your representative. And we're just trying to get to that negotiating point where we're going to find mutually acceptable terms. And this can take time. That's why I'm advising, leave as much time as possible. Don't try to, come at the last minute and figure these negotiations will be smooth. So next. All right, now we're talking about tenant improvements. And tenant improvements, basically are the improvements that are within the premises that your business is moving into. This is generally considered the most contentious part of the negotiation. And the reason is you're talking about the high cost of the improvements, and you're talking about the time period that it takes to complete these improvements. So depending upon the size of your company and how much detail needs to go into the improvements, that's where we're going to sit down, possibly with an architect or a space planner, and go through that. Then we deal with plans and permits, which are a disaster right now in this city, but we do have to deal with them in most cases. We talk about fire life safety issues. We talk about all this that has to go into the consideration of the space you're moving into. But right now we are adding actually more time into this particular negotiation and time it takes to complete because of supply chain issues. And right now they're very significant. As John will say, we'll tell you that there are items that just are not available on an immediate basis, unfortunately. So we need to plan that in right now. And this is all stuff that the broker will take into consideration. Next. All right, now just say we finished the negotiations. We've gone back and forth as many times as needed. And now it's up to the attorney to draft the lease. Now, you have to know as a tenant, the attorney for the landlord is the drafter of the lease, or the landlord draft the lease. They also created the lease. So those leases are generally not favorable to tenants. This is where you should hire or engage the representation from an attorney. And the attorney should be a real estate attorney, somebody that knows how to deal with transactional real estate. Again, the speciality of this should be considered very highly in your discussion and choice of an attorney. the dollars that you're spending to have an attorney review the lease and represent your side is money well spent. And there's, as I said, the leases are not drafted in favor of the tenants. So you need an attorney to recommend which legalese to accept and which to try to modify to make your potential liability less. And again, this goes back and forth numerous times and can take quite a while to get done, depending upon the nastiness of the lease that you might be using. So again, I recommend a real estate attorney, not somebody who's not in that field, but specific to somebody that knows transactional real estate law. Next. Now you have to sign the lease. All right, we've gone through all the negotiations. The attorney is satisfied. You're satisfied with the outcome of the negotiations. So now it's time to sign the lease. And you have to understand when you're signing the lease, be prepared to have a cashier's check for the first month's rent and for the security deposit. I recommend two individual checks, both for accounting, mainly for accounting reasons, and to follow make sure that it's that you know where it is and how much it is. When a corporation signs the lease, in most cases, they're going to require 2 signatures from corporate officers. So be prepared for that. And they may require a personal guarantee. These are all things that you should be discussing with your broker to try to limit your liability. And when they are calling for personal guarantee or a personal signature, we will try to negotiate a reduction in whether it's the time that you're liable, whether it's the amount, what the liability might be for. It might be for the improvements. The problem is right now, the improvements are so expensive. The cost of improvements is just astronomical. When I started in the business, you could build out a whole office for about $18 a square foot. Now you're lucky if you get away with building an office for less than $75 a square foot. And yet the rents haven't gone up commensurate with the dollars that it takes to do the improvements. So the negotiations become more contentious. And, we understand that the dollars being spent on these improvements are an enormous part of the transaction cost. And don't accept anything if it's not in writing. If it's not in writing, it's not. We have the 4-corner rule. It has to be within the 4 corners of that lease, or don't assume it's going to be a point that's going to be kept. So we make sure that everything is in the lease, and then we sign the lease. And hopefully that period of time is done within, I'd probably say, the first 2 months, maybe 3 months. All this gets done, and then we have the time where they're going to do the build out. They're not going to do any improvements in the space until the lease is signed. So it's not as if they're getting a jump on it. All we've done so far is done the planning portion. But now when the lease is signed, now the dollars start flowing, and the landlord now hires a contractor, and the contractor will start the work. Next.
This is great, Scott. By the way, we have 2 more minutes for the presentation, just to give you a top check.
All right. Now, prepare for your move. These are all items you should be contacting immediately. The moving company, your IT. The IT needs to be calculated while they're building the space out. A furniture company, the insurance policy, because you can't move in unless you provide insurance. Any licensing issues with the city, and also your printers. They all need time to get ready. In particular, your IT, meaning your internet service and your phone service, takes a while sometimes to hook up. All right, next. Now it's moving day, hopefully. And the process can seem overwhelming, but just don't lose sight of that goal. Good representation goes a long way in making the process as smooth as possible. Next. So these are just some items we have. The 3rd quarter of 22. This is the office market. Now, generally, the office market has been soft at best. And, unfortunately, right now, we're looking at potential downturn in the economy. It's not going to help us. The office market from COVID has changed because a lot of people now are working from home, and So it's in a state of flux. It's trying to find its new normal. And that has been going on for a couple of years. Next. Now, unlike the office market, the industrial market is different. The industrial market, on the other hand, has been going gangbusters for years. The prices have gone doubled, maybe tripled from where they were just a few years ago. And the reason for that is, one, the loss of industrial space to multifamily. Like in Warner Center, we've lost 1 million square feet of industrial space for apartments. And throughout the valley, a lot of the buildings are obsolete and can't provide the heights or the electric or loading or logistics involved in them. So the market is tight. The vacancy level right now in industrial is less than 3%, where office it's somewhere between 15 and 20%, depending upon the market you're in. But the industrial market has been exceedingly tight and much more difficult to move around, which is an unhealthy condition, except if you're a landlord. But if you're a tenant, the current 3% vacancy is very unhealthy if you need to expand and grow within the area. So that is the presentation. And I hope I fit it in on time. And thank you very much for your time.
Beautiful, Scott. Perfect timing. Thank you so much for that incredibly informative presentation. If anyone has questions for Scott, please do put them in the chat. And then after our next speaker, we will hold live Q&A in addition. But if you're feeling shy or you just want to get that question out there, Scott can start fielding questions in the chat now. So I encourage you to put those there. Also, feel free to introduce yourself in the chat and your business so that we can get to know who's here with us on the call, make more community here. Our next presenter is Heidi DeMatos, VP and Manager of Accounts Receivable Lending at Mission Valley Bank. So welcome, Heidi. Heidi is a skilled commercial lender. As such, she brings over 15 years of business financing expertise to her clients, earning her a solid reputation as an accomplished and knowledgeable business banker. Her depth of experience in accounts receivable financing, commercial real estate financing, SBA, equipment financing, and other areas of lending provide her the knowledge base to deliver unique solutions tailored to each client's specific needs and goals. So we're very excited to have Heidi in our network of resources and hand the proverbial mic over to Heidi DeMatos. Heidi, thank you for joining us today.
Thank you, Sonia. I am super excited to talk to you guys today. This is something that I'm extremely passionate about, and that's helping small and mid-sized businesses grow through offering unique financing solutions that give them access to capital that they otherwise wouldn't have access to. I want to share my screen here before I get, so here's me, hello. Before I get started on the presentation, I want to show you guys a brief video that will hopefully, it really does a great job at a high level, kind of talking about what this unique solution is. I call it a different line of credit. So this will explain it, and then I'll get into more detail.
Cash flow can be a challenge for even the most successful business. Whether you're selling a product or service, no matter what industry you're in, it's hard to grow when you're waiting 30, 60, or even 90 days to get paid. What if you were paid within 24 hours on every invoice? Could you take on bigger clients? Could you offer flexible terms to be more competitive? Could you take advantage of vendor discounts for higher profits? Or even pay down debt? If waiting to get paid is holding back your growth, then Business Manager can help. Think of your accounts receivable as a frozen asset. By working with your local financial institution, Business Manager unlocks that cash by purchasing your outstanding invoices on an ongoing basis and making daily deposits into your account. Your clients continue paying you while you get the consistent cash you need to optimize your business. Take the worry out of waiting to get paid and focus instead on growing your business with Business Manager.
Okay, so bear with me. I am going to stop share and I'm going to share my presentation screen. So hopefully that at a high level kind of told you what this different line of credit does. So now I'm going to go into just a little bit more detail about who it's for and how it helps. So as you guys all know, businesses have a life cycle, and during that life cycle, there are growth periods. And during those growth periods, that's when businesses need the most cash to access opportunity. You got opportunity in front of you, you want to reach out and get it, you need the capital to do that. So usually a business will go into a bank and they'll ask for it, right? And most businesses are familiar with traditional lines of credit, which are wonderful tools to use as far as helping with cash flow constraints and issues. But sometimes for a growing business, it's just not enough cash. Same thing. Some of you may or may not be familiar with these other two types of financing, asset-based lending. Same thing, wonderful solution for the right business during that part of their life cycle that it works for. But during certain parts, it's also maybe not enough cash. So some businesses turn to factoring companies, which do help as far as getting access to the capital you need to grow your business. The problem is that there are some not so good things with factoring companies. So what we've done with this different line of credit, this unique solution, is we've taken some of the best things from these types of financing and eliminated the not so good stuff and eliminated the parts that actually cause hindrances for businesses to grow. It's really awesome when I read that this is Next Level Growth series. I'm trying to tamper down my enthusiasm because I get very excited and passionate about growing business. And when I read that, I was like, man, this is perfect. So I really am excited to see you guys and to be here today to explain these options that you may not know are available to you. You guys can see my screen, correct? Okay, wonderful. Okay, I mentioned that this is a unique product and it's a different line of credit. But what I didn't mention is that it is not new. This is a solution that's been offered, nationwide for over 30 years. And it's helped businesses, small businesses. So when I say growing, everyone thinks, oh, a startup. Yeah, absolutely. We can help startups, no problem. But this is also for larger businesses that hit another growth period in their life cycle. Businesses have several growth periods, hopefully, right? And so we've done, seen lines of credit as little as $20,000 and as much as 40 million, actually. So we don't want to narrow the idea of what a growing business looks like because it could look like a number of things. The average time a business is on Business Manager is about 5 years, but I've seen businesses, it just depends on when your cash catches up. When your cash catches up and you don't need access to that additional cash, then you move over to a traditional line or an asset-based line or whatever's best for your business during that period of your business's life cycle. So yeah, this is not new. It's been around for a long time. It's just not widely known. Not a ton of banks offer it. And so, that's because it just doesn't maybe fit, or maybe they don't know about it. So when I say this is a different line of credit, this is a unique solution. The next question is, well, how is it different? And I also mentioned access to more capital. So the number one difference between a product like this and program like this and a traditional line is the fact that with Business Manager, we actually look at the future, whereas with a lot of traditional financing options, they look at the past. So you go to a bank, right? You're a business. You know that you need cash. You know that you need a line of credit. And the bank's going to ask you for your last 3 years tax returns, your interim financial statements and all of those things, which is fine and wonderful. But if you're a business that's growing, 50% or even doubling year over year, what bearing does your 2021 revenues have on what kind of sales you expect to do in 2023? Almost no relevance. So with Business Manager, we can actually take your projections. You're excited. You've caught the tiger by the tail. You've got Boeing in your sights. You've got big box store, Amazon. You've got Home Depot in your site, and you're excited and you're ready to go. But a lot of times with traditional financing, your historical financials are not going to support the line size that you need in order to capture that opportunity. So with Business Manager, we actually look to the future. We'll take your projections and assign a line size based on those projections. We also have much higher advance rates, 90% plus. We also give credit to invoices that are older. 120 days are past, as long as it makes sense though. So it's on a case-by-case basis, but we can do it. Quick story about projections based on line size. I a few years ago was working with a company out of Missouri that had this idea about making non-GMO dog and animal food. And there was no time in business, no historical financial information, but they wanted $1 million line. They had a scientist, a lab tech type guy, a grower, that kind of came together and had this idea. And we could have never given them $1 million line on a traditional vehicle. But with the business manager program, we were able to give it to them. They were on the program for 3 years. They grew their business. And by the time they exited, their line was at 5 million. Their cash caught up with them. They didn't need the access to additional capital anymore. They moved over to a traditional financing option. Also, I just wanted to mention with this program, there's no long-term contracts, no crazy gotcha early out terminations, no fees. There's transparent pricing. Businesses on this product know exactly what they're paying for it. And there's no monthly minimums. There's no surprises. So we really, our goal is to come alongside growing businesses and give them the support they need to reach for the stars, basically, and go after business that's right in front of them, that's available to them, as long as they want it, right? I've talked a lot about growth. I think that it was fitting, though, because we're at the next level growth series, right, guys? But so growth can look like a couple of different things. As I mentioned earlier, it could look like I'm a baby food manufacturer and I've got this deal with Amazon and they want to private label the baby food. And so they want me to not only deliver a high amount of product, but I've got to buy the carrots. I've got to pay my employees, keep the lights on, buy my jars. And then I've produced the product. Maybe it's a service. I'm done with the service. Now Tesla, Amazon, Boeing, whoever it is says, well, Heidi, we have net 60 terms, which means it's going to take 60 days before we even consider paying you. That could absolutely grow me out of business. This is why this program bridges that gap between when you issue the invoice and when you actually get paid. But growth can also look like doing more with your current customers. Again, I try to make sure we don't put into boxes what a growing business looks like, because again, it can look a number of different ways. One of my favorite customers was a company that made parts for the wind energy industry. And so for those windmills and things like that, they'd been in business for over 20 years, very established business. But during the course of the conversation, I find out that they have the option to make 2 additional parts for their current customers. They know how they pay, they're predictable. And come to find out, they have had this option to do this for years and just weren't able to do it on their traditional line of credit. There was no availability, not enough availability to get them where they needed to go. They went on the program, they were able to optimize, capitalize on that opportunity, and they grew their business. This is also good for, I know Scott talked about supply chain issues and some issues with that. Cash is king, right? Everyone's heard that term, or did I just make it up? Just kidding. So cash is king. So if you're somebody who needs raw material or access to inventory and you can pay for it up front, you're going to get it faster than the people who have to go on terms. So that access to cash can put you ahead of your competition and actually help you take out the market share and do more and more with your business. I wanted to
time check for you, 2 minutes.
Oh, I'm done. Just look at that. Almost done. I was gonna close nicely though, but I'll thank you guys so much. I really wanted to be cognizant of staying on time because you can ask some people that know me. I can tend to get really excited and keep talking about it. But I left my information up here. Any questions that you have now, I'll obviously happy to answer in the chat. Or if you think of something later, this information will be available. And so call me, text me, email me. I would be happy to hear from you and answer any questions and give any direction I'm capable of giving. So thank you so much for your time.
Oh my goodness, Heidi, that was great. Perfect timing. You're amazing with that. And what an awesome presentation. You know, what we find that access to capital is such a critical issue for so many of our businesses. It's really helpful to have that information about those options. So everyone, I'd like to just ask you to pose questions for Heidi in the chat about that great presentation, information, access to capital, and this particular program. And meanwhile, we'll start fielding questions for Scott in the chat. And I noticed that the first question that came in Thanks, Connie, is a question, is flex space moving into office space since industrial is getting tighter? And by that, what's meant is landlords are landlords more open to putting flex into traditional office? Scott, what do you think?
Absolutely. There is a shortage of quality industrial space. As I said, it's obsolete. The stuff that was built in the Valley 50 years ago is just not usable as it should be for the industrial users. So right now, for instance, here's an example. There are a couple of buildings on Agoura Road on the 101 corridor that are large buildings. These are, well over 100,000 square foot buildings that were 2 floors, and they had in one of the buildings was an insurance company that used to bring their employees in. They'd have hundreds of employees there to do trainings. And that building sat there for years. And finally, what they did was somebody bought the building and has decided to take down most of the second floor in that building. They demolished the second floor, which gives the height that these industrial users require. And they could keep some office space on a portion of it. But it's basically like adaptive reuse for other opportunities. And with the lack of space that we have, and there is a lack of space in the Valley, and the lack of usable buildings, this is a great way to turn things around. And on the corridor, for instance, they're trying to bring the biotech industry in. And the biotech industry is a very, very well-paying industry. It's high paying. And that's really what will provide the resources that the government requires. When you start bringing in the high-tech people, their dollars will flow with them. And it's important. We have Amgen out in Thousand Oaks. We have other biotech companies out there. We'd like to see the expansion of that come into the Valley. We'd like to, CSUN would be another location that would love to see some biotech. But yes, there is adaptive reuse going on. They're turning office buildings. We have some office buildings that are obsolete, and we'd love to see some different use come up for those. That instead of sitting there empty, let's use these buildings. We don't necessarily have to knock them down, because right now it's too expensive and too time wasting because of the supply chain issues to rebuild. So let's convert these buildings and reuse them for specific requirements that would help us.
Absolutely. Absolutely. And in fact, at our regional real estate development conference, the Alliance is hosting on January 12th, we'll actually be talking about having speakers talking about their projects on adaptive reuse and turning retail, office space, whatever what have you, into housing and mixed use spaces. So that'll be very interesting. But a second question for you, Scott, relating to this about biotech, and there's some comments here in the chat also about biotech and how they're kind of pricing some of the smaller businesses out of the market by driving up the cost of real estate. Where can small businesses maybe find spaces in the Valley for like $2,000 a month, $5,000 a month, something under $10,000 a month? And especially to Ray's question in the chat, for maybe someone moving from a home-based business into their first commercial space, how can they compete, or where can they go to still find space given everything going on with the bigger, especially biotech companies?
Well, I understand the question. I don't necessarily agree specifically that the rates have gone doubled and tripled. I've been in the industry for 37 years. To give you an example, the towers in Warner Center, those office buildings, they were built in the mid 80s, late 80s. When they opened up, the office rates there were $2.35. I remember I went to a party with Tom Bradley on the opening of one of the buildings, Mayor Bradley. And the rates were $2.35. Today, you could do leases in these buildings for $2.50. In certain buildings over there, less. So the rates haven't doubled or tripled in the Valley. Right now, we've got occupancy of about, somewhere between, 83 and vacancy rates of 14 to 20% in the Valley. I have space, down as small as 500 square feet. So we can find you the space. There's plenty of office space out there. There's really not a shortage. Some areas might have less construction to make it a little bit more difficult, but generally we'll be able to find you the space, depending upon the use. Medical use might be difficult because of the zoning requirements, or other uses that require heavy parking. These could be difficult to find because these buildings were not built with these requirements in mind. But general office space, it's pretty free flowing. There's plenty that we could come up with.
Awesome. Well, folks can reconnect with Scott. Maybe Scott, if you put your info, your contact info in the chat, people can ask you more questions about this, which will be very, very helpful. And questions for Heidi. Thank you so much for that, Scott. Appreciate it. Also would like to leave an opportunity for a question for Heidi. And Heidi, I don't know if you if I missed this in your presentation or if you covered this, excuse me, but I was wondering, the particular program that you're talking about, is that more a line of credit where folks draw down as needed, or is that kind of a lump sum loan and they have to pick a specific amount up front of what they might need? Is it a monthly amount? How does that work in terms of the format?
Great question. It's a program where you continuously will fund your operating capital through your invoicing. So it's based on your accounts receivable. We fund based on your sales, and it's given to you in real time. I wanted to emphasize also that when you have made a sale and you want to fund on an invoice, that money is usually available to you the same day. So sometimes it's the next business day, but that's worst case scenario.
Got it. Great. Okay, well, awesome. Well, I want to thank both of you. Any further questions for Heidi, by the way? Okay, seeing no hands, I'm going to say, Heidi, if you would also just put your contact information in the chat, because people may indeed want to get in touch with you after this. We are also going to be posting the replay and the slides. Those will be available on our website, and we're going to send those out to everyone who registered for today's event. So a couple of additional announcements. By the way, we are starting our Economic Development Committee meeting at 10:45. So I encourage everyone who's joined us for Next Level Growth to stay with us if you'd like to learn a little bit more about more regional issues and topics that the Alliance is interested in and working on and concerned about. And we'll have a wonderful presentation about the city of San Fernando and a lot of the development that's taking place in that city. We have upcoming programs, additional programs. Next week, we have our Veterans Job and Entrepreneurship Summit on November 10th. And our Women's Entrepreneurship Day program on November 15th. So definitely plan to join us for those. All are welcomed, and the business information available will be applicable to every kind of business. We just want to do special recognitions for Veterans Day and Women's Entrepreneurship Day. In addition, our Livable and Sustainable Communities will be meeting on November 17th, and we'll have a presentation on the regional initiatives of the San Fernando Valley Council of Governments, which the Alliance was instrumental in helping to found in 2010. So I encourage you to join us for that. Also very important to keep in mind the free business assistance that we offer, and you can learn more about that at thevalley.net/assistance. I noticed that our board chair, Fred Gaines, is here with us on the line. And Fred, we do have a couple more minutes before we convene for our Economic Development Committee, if you'd like to say a couple of words. Fred, you there? Okay, no worries. And with that, I would like to thank everyone for joining us today, in particular our speakers, Scott Silverstein and Heidi DeMatos. Thank you so much for your insights and your time and your passion for the business community. We really appreciate that, and we know that your expertise and insights translates into economic development for our region. So we're very thankful for that. And we're thankful. We're thankful to all of you for attending. We are going to end the recording for the Next Level Growth program at this time, and our Economic Development Committee meeting will begin in just 1 minute. Thanks so much for joining us.